Welcome to this seminar on social media sentiment cycles. My name is Lars Fontinen from WhenToTrade.com. Today I want to show you how to use social media sentiment and cyclic analysis to predict market turns. I think social media is quite a new field of research and science, so it's quite interesting to put cyclic analysis on top of that to see if we can get something out of it on financial markets. I will use a verifiable public real-time prediction, which was done just in March. So we have now May 2015. So we have the last 2 to 3 months to have a real-time review on this situation here. So let's start. First of all, if we talk about social media, please be aware that about the disclaimer that all information in the seminar is for educational purposes only, and make yourself comfortable with the legal disclaimer which applies to the seminar here. So, when we talk about sentiment cycles, we have to start with a little bit of theory on the basis on sentiment cycles. So if we talk about sentiment, we can divide it into two areas. Above this line here we have a bullish sentiment, and below this line here we will talk about bearish sentiment here. So sentiment moves in cycles. So this is the interesting part why cycle analysis will make sense, because cycle does not just jump from excitement to depression. So each sentiment phase will go through these stages. So we start with optimism, then we rise to excitement, about thrill, and then we get at the top at euphoria situation here. So this is the maximum point of financial risk, because from this point here it can only get down here. So then we have positive sentiment, but we will come about denial, and fear starts to come up the scene here, and then we have this break even that the sentiment will turn bearish into a negative mood. So it's correlated with a panic capitulation, which will then move into this maximum point of panic, so which is a good point for financial opportunity, because from this point in time here the sentiment can only get better into the upwards turn here. So then if we around this turn, we will leave the depression, come again into hope, relief, and we'll back to optimism, and then the cycle starts here again. So it's an endless cycle. It's just going this way. So the good part of the story is that sentiment has to undergo each stage. Sentiment cannot jump from here to here or from here to here. So this is based on sentiment analysis. So this is the theoretical cycle. If you put this on financial data, for sure in the financial area you will not see this type of clean cycles. So put on the price chart, it will look something like this, that you have these price moving upwards into the optimism, which starts here, then goes up into the thrill and euphoria point, which is a huge topping point here, which correlates to this point of maximum financial risk at this point in time. So then markets drops down. This is the bull trap here. So but then again we have this situation here. We think we will move upwards. Markets just needs to pause. So this is a situation where we come to denial and fear. So we won't accept that what will not proceed this way. This is exactly this point in time, and then markets drop sharply. This is when we come here below these balance point here, so and below this line the bearishness overweights, so then we get this price moving down into this panic and danger zone, which is then here and comes to a point of maximum financial opportunity, which is something going here. So and after this point we will move up into the depression and hope phase, so and then the cycle starts again. So as you see in the financial data, it's not a clean cycle as this. And now 2 points are interesting here. So first of all, it would be interesting to measure sentiment, because price is just following sentiment. So if we analyze the price data we have, we use lagging information. Therefore, the first thing, it would be nice to have real raw sentiment information for our analysis. Second point is, as sentiment moves in cycles, it would be good to have cycle analysis tools which will be put on the raw sentiment information, because as you see here, sentiment moves in cycles, but if you come to reality, we need a dynamic cyclic analysis tool set, because the cycle is not static in financial media. Therefore, we need a cyclic approach which is able to track the dynamic component of cycles. Now, if we want to put both topics which I've explained into practice, topic one is we need raw sentiment data. In this case, we will use PsychSignal sentiment data, which is available now via the psychsignal.com website, or via Quandl, or via the When2Trade charting platform. So PsychSignal delivers raw sentiment information, and it's real sentiment information from the social media area. So they harvest Twitter information, or even mood, which is expressed on the internet, and they bundle all these information, or the social media information, into a bullish and bearish component, and you can grab this raw sentiment data here. So, and the second thing is how to do cycle analysis. There's where our cycle tools from When2Trade come into place, and we can analyze these raw sentiment data from PsychSignal with our toolset. This is what I want to show you now in a real case scenario, so no PowerPoints here. So I will switch to the charts here. For this demonstration, we will use the Euro-US dollar currency pair. Here the long-term view from 2010. Price moved sharply down. The point of the analysis is the 20th March. I've chosen the 20th March because at this point in time, on the 20th March, I've forecasted and put out a real-time blog post with this analysis. So I'm not just making this analysis here for the webinar. This analysis was done just 2 months ago. So let's just review how it played out. So this is the Euro-US dollar on the 20th March long-term view. Here's the short-term view. So the Euro-US dollar price came down a lot. We are in a long-term downtrend here. Just popped up from the low, and then the question here is this just a pause of the longer downtrend, and will it resume the downtrend, or do we expect an up move or larger pause of the downtrend here? So to get a clue out of this, what I've done here is we will use the PsychSignal raw sentiment information here, which is plotted here below. So let's make this chart a little bit more readable. We will start with the sentiment analysis first. So what you see here is the raw information which is provided by PsychSignal. You can get this data via their website. If you log in at psychsignal.com, you will get this data there via Quandl or via When2Trade. So what you see here is an oscillating raw information. A value above 0 means we have a bullish sentiment, social media sentiment, and a value below 0 means we have a bearish sentiment out there. Be aware that this sentiment has nothing to do with price data. So this is real social media sentiment information here, which is just plotted on a chart here. So the raw data is very unreadable here, so you need something to prepare this data. So what we will do here is we will now check if our cyclic toolset can give us a clue out of it here. So let's make it a little bit more readable. We will just smooth out the real data, and I will put on just a smoothing. You can use any smoothing you like to want. So this is just a standard smoothing to make it a little bit more readable here. Let me just put it on price data here. So this is smoothed out now, the raw data here, and we will start now with putting some cyclic analysis on top of that. So let's see where we can start to play with it a little bit. So okay. So we will use our Dynamic Cycle Explorer, which is a tool set which is able to detect dynamic cycles automatically here. So we will put it on a chart. What I want to do here is we are talking about long-term cycles as the euro-US dollar currency pair is in a longer downward move. We are not looking for short-term cycles. We want to check if they are longer sentiment cycles. So we choose a range between 200 and 300. And let's see if the Dynamic Cycle Explorer is able to detect cycle completely automatically here. So we will use some major turning point in the past. So this April top here is related to this April sentiment top here. So we will start our analysis here. And what you see here is the dynamic cycle is detected automatically and plotted down here below this sentiment information. So the blue one is the detected cycle with a length of 208 bars. So in this case, 208 days. The red one here is the real movement, just filtered out for this length setting. So here we have a great correlation between the theoretical cycle and the real sentiment cycle here. And the interesting part of the story is that the cycle points to a current low here in the market. But however, we need first to check if this cycle gives us some valid information here. So this is a pure sentiment cycle here. Let's first check if it has a correlation to the sentiment information here on the chart. Therefore, we will just map the turns from these sentiment information to the price data, just to see how it correlates to this information here, and just check if there's the real straight here. So what you see here is if we just map this theoretical cycle here to the sentiment information, it has an accuracy of about 80% on the sentiment information. So what we found here is a sentiment cycle which has an accuracy of around 80% on the sentiment information here. So let's make it a little bit more clearly on the chart so that you can see what I'm talking about here. So let's move it here to the points in time. So then I would just put some lines on it here. So just that you can see what I'm talking about. You can see this is the sentiment cycle. Just marking it on the chart here. So here the top is here now, just correlating here to this information. Here's the top, here's the low, here's the top, here's the low, here's the top, low. You see how this is marked here. Here you see now that even in the raw data, this cycle is not visible. Our cycle toolset was able to discover this cycle in the sentiment information here. So we are now aware of a valid cycle in the social media sentiment here. So and what we expect at this point in time is that this cycle has a correlation to the price data. So therefore, we will do the same now on the euro-US dollar price chart here. So here's the top. So I will just mark it now on the currency pair price chart. So here's the top, here's low, here's the next top. So then here we have the next low. So here's the top, here's the low. See, it's correlating here to this one. Here's the next top, here's the next low, somewhere here, exactly the top. Now here's the next bottoming area. So here's the big top. So here's okay, we won't see it. No, here's the next topping area here. Here's exactly where we are now, point in time here. So let's make it a little bit more readable here. to draw a line. So we're talking about this cycle here, which has been discovered in social media sentiment, and we now plot the cycle onto the price chart here, just to see what our social media sentiment showed us. So okay, for this one, so there's one out of these cycles here which is not played out. So if we map these 208 days cycle to the euro-US dollar, you see how this cycle correlates to price movement in the currency pair. I've just mapped it to the price chart here. So, and this cycle is now projecting a sentiment low. No? So this cycle is now at the exactly bottoming phase. So if we switch back to our presentation now, which I've just shown you, the cycle points at the point of maximum financial opportunity this way here, because from this point in time we expect the sentiment to move upwards, and therefore this correlates to this price area. So the price should move up from this point in time here, from this point of the cycle here. And this is exactly what our cycle is pointing out here on the sentiment information. So we would expect here on the 20th March that the major sentiment cycle has bottomed and would now start to move up here. On top of that, we could do another thing and just check just another cycle. Therefore, we will just again move to our raw sentiment information here, and we will see that here's a major low, which is correlating here to these low at December 2010, January 2011. We can anchor another analysis here and also check if there would be a valid second cycle here. So we will again use our dynamic cycle explorer. For this case, maybe we could choose a different range. We will again check for longer term cycles here. We will plot it back for a lot of time. So I'm not putting a special cycle here. So we will let the dynamic cycle explorer detect the cycle completely automatically. We will just checking a long-term range here. So and again, we are now putting it here on the low, this point in time here, and we now see that there's a second cycle detected, a second major dominant cycle in the market here, with lengths of 166 days. It's plotted also here down below. You see the blue one is the theoretical one, and the red one is the filtered sentiment information, and you see again a high correlation here of this other cycle here. So we have two active dynamic cycles here, one with a length of 208 and one with a length of 266. The second one looks like it has bottomed just at the end of February, but is again now moving upwards here. So it's supporting our first cycle here. Let's check the profitability of this cycle here. What we can do, we will use our mapping tools here, which we have, so to make a very fast check if this cycle is correlating to the price information. So we will use the sentiment chart. We will check the second cycle here. So the second cycle is named Dynamic Cycle Explorer number 2. We will now map it to the price chart we have, and we will again look at the trade statistic of this cycle on the price data here. So let's now map the turns. What it has done here, it has purely mapped the sentiment cycle information here now on top of the price chart here, and trades this cycles on the price chart here. So what you see here at this second cycle has an accuracy of over 60% on the price data. So trading this sentiment cycle on the euro-US dollar currency pair would give you an accuracy of about 64% and a profit factor of 2.3. So very profitable and accurate cycle. We can also have a look at the equity curve. Let's just put it on a graph here quickly. So this would be the equity curve of this cycle here on the euro US dollar chart. So trading 166 sentiment cycle equity curve. So this is how the equity curve would have looked like if you would have traded these 166 days sentiment cycle on the social media sentiment cycle on the price chart. So it's a smooth upsloping equity curve here, which would quite look ideal here. So yeah, so we have a second confirmation here that if you would have traded this cycle, there's another interesting point in time here. And now what we are interested on is that these two cycles are in alignment here. So what you see here is two major cycles on social media sentiment in a bottoming area here, expecting an up move, yeah, let's say into the end of May, June. So it's not just one cycle, there are two dominant cycles on sentiment. Now projecting this, we have checked the accuracy of both cycles against the sentiment and against price. Both cycles have a great correlation to sentiment and price. We have plotted the signals here, and both cycles show us that we would expect an upturn here in the euro US dollar currency pair now. So yeah, this is what we've done in real time. So this analysis yeah, was posted in real time. Yeah, and the good thing is now today we have the outcome here. So what we can do now is we can just move forward in time. So this is where we are today here. Today we have the, let's check what we have today. We have the 15th May. So this is where I've recorded this webinar here. And you see that the price in the euro US dollar currency pair just pushed up from this point in time here. So we started our prediction here on the 20th March at the price of 1.08 something here, and the price just moved up as expected from the sentiment cycles. And it's not just some up move, it's the largest up move here for a period of over 2 years in history here. So even if you see these on a shorter term basis, so this is the 20th March where we did our analysis. Yeah, more closer up look here, and this is where we are today. So you can see that this was the point in time where we did this forecast, 20th March, exactly at this point in time here, and we now moved up here, up to this point here. So, and if you look up this up move here, so as pointed out here in this presentation, yeah, it's, I mean, just based on the price, we have an up move of over 5% on the euro US dollar currency pair. If you have this longer up move, and this is interesting, it's the biggest 30 days up move for over 2 years now, yeah, as seen here on the right chart on the side here. So exactly this forecast, which I've shown you here now step by step how this is done with these cyclic tools, with this chart here, and exactly this chart was posted real time and live on the weekend of the 20th March, so before markets opened again on Monday the 23rd, at a price of 1.081. So this was posted also at Psych Signal public blog with the information, "Are euro set to bounce as sentiment cycle turns positive?" So we did this in real time. We didn't know how it will turn out in the real world. Also a LinkedIn Pulse article on this one, and on the When to Trade public magazine article was posted the same forecast. So this is a very verifiable forecast. You can validate it on your own, as exactly this type of analysis was posted in the public internet. So yeah, and it's about cycle analysis. And what I want to show you also here is that this up move, this is what I've shown here, is that if you have a look at the 30 days price change since 2013, you will see that the maximum price change, yeah, it has been in 2013, was about 4% here, and then moved constantly down. Here, this is the 20th March, and exactly at this point in time, we posted this forecast, and just 30 days later, we have the highest 30 days increase in this currency pair for over 2 years. So we have an increase of about 6% or 5.5 range. And we have not seen such an up move for over 2 years. And I think now this is the interesting part, that it was not just by chance just forecasting an up move here. It was just forecasting the largest up move for over 2 years. And this was done ahead of time with social media sentiment cycles. Yeah, so finally, what I want, what you can do now is just have a look out at the website of yup, let's have a look at it, of PsychSignal. So there the data is available. So this is their website. They have an API, and they will give you this information. So you can register there for free, and once you've logged in, yeah, you can grab this raw sentiment data here. So if we just look at the euro, US dollar, they show you the raw sentiment information. I'm on Apple here. So for each vehicle, you will get the raw sentiment information with bullishness and bearishness here. So this is what will makes it interesting, that you can grab the bullish bearish information on your own. And as we partner with PsychSignal, you will also get the dynamic cycle information there. So I think this is really something new what we have launched just together with PsychSignal. So the dynamic cycle information will be shown right on the PsychSignal website here. So here you will get the detected dominant cycle. I've shown you on the Winter Trade charting platform how you can do this manually and research it on your own. However, PsychSignal will do this automatically. So this is the current active dynamic dominant cycle, which is detected and plotted here on the chart. And the information of this cycle is shown here. So the length information, the amplitude is also shown here. So this is one point where you can get the data on. The other interesting part is that we are the When to Trade platform. We are partnering with PsychSignal, and we will have a direct access to their API and can request the sentiment information right from this charting platform. So you have two possibilities to request social media sentiment data directly from the website. So, and you can also see the dynamic dominant cycle there, which is done automatically. So we provide these tools to them. And on the other hand, you can look up real social sentiment data with the Winter Trade charting platform, and then do your cycle analysis on your own. So I hope you like this presentation on dynamic cycles in correlation with social media. And hopefully you'll see that you can get a real value out of social media cycles, which we have proven here with the real-time forecast from the euro US dollar forecast from the 20th March. So thanks for listening to this seminar, and I would welcome you on the website wentotrade.com. There are a lot of additional free articles on social media sentiment. So if you're interested in reading more, just visit our website, and there you will find a lot of articles which you can download and even read to check just a lot of informations on additional informations where you don't have to pay just anything here. So move to the magazine side of the core futures. So here's a lot of about social media sentiment cycles. So you're welcome to just get some more information on this topic here. And finally, just do your own research. I think social media sentiment cycles is a very new, young field, and it makes really sense to put your knowledge of cycle analysis on this kind of data. Thanks for listening and see you. Bye.